Very solid set, very strong beat versus the expectation as well. And some of these chemical stocks are showing signs of reversal. So for Sumitomo, of course, the margin expansion is something which drove the EBITDA beat. Overall, if you look at it, the EBITDA rose 74% year on year to a number of 140 crores, which was almost 40% higher than what Street was expecting. Axis Capital, for instance, was expecting EBITDA to be around 100 crores. The EBITDA margin, as a result of that, expanded by 840 basis points year on year, led by the gross margin expansion of 1,040 basis points, so 10 percentage point on a year-on-year basis is kind of improvement that we have seen on gross margins. However, some of the overheads were higher, and that's why the EBITDA margin expansion has been a bit limited. Revenue grew by around 3% year-on-year, so that is just 4 to 5% better than expectations. So while revenue was largely in line to slightly better, it is the margin beat which actually surprised the Street quite positively. Overall, if you look at the profitability as well, that's jumped 52% year-on-year. There has been a bit of rise in exports as well, even though the domestic revenue would have been flattish for them due to subdued realization and high channel inventory. Exports is something which is looking up for them. We don't usually talk about this company, but clearly in 52 weeks it hasn't done much, even though from the bottom in the last 3 months it's seen a bit of reversal. My guess is it's likely to show a strong showing today in the trading session.